Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we got a big update to end the week. We made it to the end of the week and the Dow's up about 400, Nasdaq's up about 200. Where are we at on the S&P? Well, we're right at that 4,100 level. It's kind of like it's glued to that level. Look, a couple big down days, rebound right back up to the 4,100 level. We're sitting right under a resistance area, right below the 20-day moving average, and we bounced off the 50-day moving average, back and forth, back and forth, back and forth. Now, I do eventually think that the market is going to break down. I think the bears are already in control of this market. Now, some people have the other take that this is a new bull market and we're going to run up. That's not my take. That's not my take. We're going to come down, retest those October lows. Now, nothing goes straight up, nothing goes straight down. But this market is just glued to that 4,100 level. I think we're going to break down from there. We may push up into that resistance zone again, 4,150 to 4,200. That's an opportunity for the short sellers. We'll see how this plays out, but I do think the market is going to come in. All right, so I want to talk a little bit about the housing market, and I want to talk a little bit about the macro picture, what's really going on right now. Now, right now, we had that Fed raise rate, right? They raised it a quarter basis point, and they were up above 5% now, above 5% on the Fed funds rate. Now, this is the highest it's been since 2001, right? Okay, then we pushed it back up above 5%. Now, the Fed is raising rates into a banking crisis. We know we have a banking crisis. They're failing on average about one a week. They're failing right now. And we have a commercial real estate crisis. We know that that's in a crisis. They can't refinance their loans because the loans are now at the higher rate and a lot of them are going into default. And we have a corporation crisis. We don't talk a lot about that. I do want to talk a little bit about that. Now, when I say corporation crisis, what do I mean? I mean, there's a lot of zombie companies right now, a lot of companies that don't bring in enough cash flow to pay their debt. So what do they have to do to stay alive? Well, they have to borrow money. And if they can't borrow the money, they go out of business. So a lot of these companies, these zombie companies, they went IPO. They went an initial public offering and sold it to the public. And within a year or two, they're already bankrupt. They can't survive. They should have never been a business. They should have never gone public, but they can't get the money. Now, back in 2008, 2009, these zombie companies, they had about $500 billion in debt, right? Well, this debt that they have is tripled now. It's about $1.5 trillion that these zombie companies have. Now, when they can't borrow money or the money's too expensive to borrow or nobody loans them the money because they're know that they're going to default on it. Well, these companies go out of business. Now, what happens when they go out of business? Well, a lot of jobs are lost. A lot of jobs are lost. Now the Federal Reserve, the Fed, they will admit that we're going into a recession. I've never heard them admit that before, but they say, don't worry, it's a mild recession. Well, they're saying, don't worry, it's a mild recession. I guarantee you we should probably be worried. This will probably be the biggest recession of our lifetime. Now, you can't say that D word, people get scared. But yeah, I'll probably go into a depression. But the Fed, they think it's just going to be a little mild recession, and then we're going to move on. Now, okay. So what happens in a recession? Well, recessions cause defaults. They cause bankruptcies. They cause people to default on mortgages. Now, right now, I agree right now, there's no inventory out there. These are the good times. Okay. But you see, nobody has to sell yet. Nobody has to sell their house yet, right? There's no panic in the market. There's going to become panic in the market. And when it happens, it'll happen relatively quickly. Nobody's in a big hurry to sell their house. Houses are kind of stable. Of course, in your area, they're going up. But new listings are down about 20% year over year. 20% new listings are down from the time last year. Okay, people are not putting their house on the market for sale. They're sitting back and they're going, look at, I don't know. I want that price Billy Bob got. And if I can't get that price, I'm just going to sit back and wait because I don't need to sell yet. There's no forced selling, right? Okay, well, eventually the recession will hit and there will become, well, massive forced selling. When you're out of a job, when you have no money because you have a lot of debt, a lot of consumers are in debt, not just with their mortgage. They have this credit card debt. Credit card debt's at a record high. Their mortgages, well, those they got to figure out how to pay. Student loan debt, well, they're going to have to start paying on that again. Now, you realize that for the last 3 years, nobody's had to pay on student loans. Well, eventually they're going to have to start paying again. And this is going to make it more and more difficult to pay the mortgage. The recession will have a lot of defaults, and that's going to happen. That's just the way that this will play out, right? And this will bring a lot of that forced selling onto the marketplace. Now, I know in your area, nobody's going to be forced to sell their house in your area. It will keep staying up high. But I want to talk a little bit about this no inventory thing. Now, people say, but Mike, there's no inventory. Prices can never go down. Look, there is inventory. You go on Zillow, you type in what you want. Type in a 3-bedroom, 2-bathroom house, put the zip code in, hit the button, and boom, inventory pops up. What's wrong with the inventory? Well, you can't afford it. It's too expensive. It's overpriced. It's up where Billy Bob's at, and we're not at those prices anymore. Prices have come down. But the inventory's there, but you just can't afford to buy it. Now, look, at most people right now, if they had to buy their home all over again today, they couldn't afford the home they're living in. Why? Because the rates went up. They went from 3% up to 7%. So most people cannot afford to buy the home they're living in. Now, how do they expect other people to afford to buy the home if they can't even afford to buy their own home back in this marketplace? Look, the prices of homes are unaffordable, and this will change. It will not go higher. People think it's going to go higher. How can it go higher? People cannot afford the homes right now. So it's kind of locked up. It's kind of frozen over. We're kind of in a standstill. We're in the calm before the storm. And believe me, the storm is coming. And I'm going to talk a little bit more about why the storm is coming in a second here. But the storm is coming, but people can't afford to buy homes. So what has to happen? Something's got to give, right? Otherwise, we'll just go through history and nobody will ever sell their home again. Nobody will ever buy a home. Okay, well, something's going to give. The price is what's going to give. The price is going to come down so that people can afford them. That's when people have to sell. When the forced selling comes into place, when the recession comes and people lose their jobs. Now, I know the job report came out today, but Mike, jobs are booming. Everybody can get a job now. Look, this can change in a heartbeat. It really can. Yeah, the jobs report today is good. I'll admit that. Okay, but it can change overnight. This is old news. New news is coming forward. What's ahead of us is not on the radar for the people writing these articles that jobs are way up right now. What's ahead of us is a lot of pain and it's going to be very painful. There's going to be suffering, and a lot of people are going to get hurt. Now, look, okay, you go back to 2008. What happened? Well, there was the subprime crisis. People were getting loans, right? People, if you were breathing, you could walk in and get a loan. What they put you in, though? They didn't give you the good loan. They didn't give you that 30-year fixed rate loan. No, they gave you that adjustable rate loan. And when it adjusted, the subprime borrower, he couldn't borrow anymore, right? And we go, but Mike, today nobody has an adjustable rate mortgage. That would be stupid to get an adjustable rate mortgage in this market. Well, you need to get a fixed rate, and everybody's locked in at that 3% fixed rate, right? So they don't want to sell their house. Okay, so that's smart, right? They were smart to get the 3% and lock it in. All right, well, let's talk about some people that were really stupid. Okay, these would be the people in your government. Okay, now what they did is they had a choice. They could lock in. We're $32 trillion in debt, and somehow we got to pay this off. They could have locked in 30-year money, like the 30-year mortgage that you locked in. Now, you got yours at 3%. They could have locked in the 30-year around 1.5%. But what did they do? Well, they wanted to save a little money, and they went for like a 2-year, a 1-year, a 3-month. Do you realize our $32 trillion in debt is now rolling over. It's an adjustable rate mortgage. What's it rolling over at? Well, it's above 5% now. The Fed just raised rates, right? So we have in the next year, about a third of the debt will roll over. And in the next 2 to 3 years, half of the debt will roll over at the 5% rate. Now you can do the math. This is just common sense. You do math, that's just round numbers, 30 trillion, 5%. What is that going to cost a year? What's going to cost about $1.5 trillion? Okay, what do we bring in tax receipts a year? Let's call it a little over 3 trillion. So it's going to take about half the money that we bring in just to pay the debt. Okay, so what are they going to do with the other half? Well, they're going to try to run the government. But the government's got problems right now. They got unfunded liabilities. These unfunded liabilities are well over 100 trillion, close to 150 trillion, and they would be things like Medicare, Medicaid, Social Security. Now look at us baby boomers. We're getting older. We're going to need that Medicare. We're going to want our Social Security. Everybody put the money in, but they don't have the money. It's an unfunded liability. What'd they do with the money? Well, they put the IOU in there. They gave them a bond. They go, here, we'll put the IOU in. We'll take the money and we'll spend the money. And then, well, what happens when we need the Social Security? Oh, it's not there anymore. Look at you young people. You're going to, a lot of you don't like the baby boomers. If you didn't like us before, you're really going to hate us when we're all collecting the Social Security. We're all on Medicare having those high expensive medical bills. And who's going to be paying for that? Well, you are. You're going to be out there working away and they're going to tax you. They're going to tax you in many ways. They're going to tax you. They're going to take Social Security out. They're going to inflate the dollars. They're going to inflate like crazy. And you're really going to be upset with the baby boomers. Look, I'll agree that it's going to be so much better world for you guys once us baby boomers are long gone, once we die off, once we pass away, once it's over for us. The world will look a lot better. Why? Well, you won't have to pay for our Medicare. You won't have to pay for our Social Security. You won't have to worry about house prices because house prices will be so cheap that nobody will want them. Once the baby boomers move out, there's going to be so much inventory coming onto the marketplace. This is just common demographics. Demographics will take over and your life will get a lot better. I know right now it's frustrating. You're going to have to work to pay for us old people. We want our Social Security. We need our Medicare. We're going to have health bills. We're not that healthy. Most people are very unhealthy and those bills keep going up and up and up. $150 in unfunded liabilities, 32 trillion in debt that we have financed at short term. We could have had it financed at long term, but your government officials, it's sad. They could care less about you. They don't look out what's good for you. Look, common sense will tell you when you bought your house, you're not going to get an adjustable rate. You're going to lock in that 30-year loan. They could have done that with the debt. They didn't want to. They want to save a little money. That's all they care about is getting reelected. They don't care about you. They don't care about me. They care about getting reelected. They want to stay in power. So they tried to save a little bit of money and had put our country in the biggest crisis that I've ever seen in my lifetime. And they'll tell you it's not a crisis. They'll tell you everything's fine. Look, there's depression level stuff that's going on right now. It's not normal for a bank to fail every week. Look, it's not normal to pay $500 billion just to bail out 3 banks, $500 billion to bail out 3 banks. That's what it took to bail out all the banking system back in 2008. But now that's just 3 banks, and there's so many more banks that are going down. So many more are going under. And this is going to cause a hard landing. It's going to cause a recession, right? It's just the way it's going to work. There's the commercial property. Commercial property is the same way. It's the adjustable rate mortgages. They refinance every 3 to 5 years. And right now they're having a hard time getting the money. They can't get the money. This is going to put us into the worst recession you've ever seen. Now, a lot of you young people, you've only seen markets that go straight up. This market is going to crash eventually, going to lose about 80 to 90%. I'm talking the stock market there. Now, the real estate market's only going down 50%. think? Because there's that gentleman in the comments. He's going to buy every house if we drop that 50%. So we know the floor is now 50%, right? Because he's going to buy every one if they drop 50%. Well, that's my take, is they're going to drop 50%. I thought they might drop a little bit more, but apparently there's people that are going to buy them all up. And that's great. I'm for putting the floor in on the housing market, but I think it's got a lot to drop here. Now, that's just my take. Your take's going to be different, right? I mean, that guy's take is it's never going to come down. We're only going up. My area only goes up. I'm Tall Mike. Get out there, everybody. Have a great weekend. Hit the subscribe button. I want to talk to you next week. Me and you, get out there. Bye-bye now.